Loving the Smart Property Investment Show? Then you're going to love tuning in every Monday to the Scouting Australia podcast, hosted by Sam Gordon, Smart Property Investment Show's most downloaded guest.
That always just triggers in my mind. Like I'm always wanting to look after people because of what happened to me there.
What are you waiting for? Listen to the pros at the Scouting Australia podcast, now on all your streaming platforms, and get educated.
This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
And as I sit there anticipating the introduction music, hey going, Phil Tarrant, host of the Smart Property Investment Show, tuning in on the Property Investment Podcast Network. Welcome. Thanks for getting stuck in, advancing your knowledge, capabilities around property investment. Also to our friends on the internet, on the YouTube, you're watching us. G'day, how you going? Recording on a Friday, so I'm a bit dressed down. You'll see. You probably can't see below the table, but I do have shorts on and a pair of thongs and a T-shirt. Getting stuck into it in the office today, working across a whole bunch of different stuff. But it's great you can tune in. There's a lot of information, a lot of sentiments. I was just picking through the paper before coming on air, and I was looking at the inflation data, which looks more promising than the last quarter. It's down quite a few points to the high 6 or 7%. So those inflationary pressures seem to be easing somewhat, but there is still increased cost of living, and it's mainly around certain goods at the moment. So you're going to get this sort of two-speed market now where there's going to be inflationary pressures on some parts of the Australian economy, where it's going to be softening elsewhere. People are still watching wage growth data as a key indicator. I think what I saw was some economists giving us small odds for a interest rate hike in May, and we're probably tuning into this just before that happens. So I might have my timing wrong, I might not. But some economists are also pricing in potentially rate reduction in December. So I think the bond markets are predicting no rate rises now moving forward. So you get stuck into this, you can consume as much data as you want, and much like myself, you probably sit there just going, okay, what does it all mean? What do I do about it? How does it really change what I'm going to do? Now, if you can invest in property, is my tip. If you've got your finances sorted, you got your loan squared away, you've got the family budget in check, you're dealing with the rising cost of living in an appropriate and responsible way, and you're ready to invest, guess what? Get stuck into it. And we're about to announce something here, about to release it. You'll see it soon. You'll know what I'm talking about once it lands, which is very much orientated towards that. So watch this space. It's pretty exciting stuff. Can't give too much away. But a lot of investors are still writing into us going, what do I do? Where do I invest? How do I do it? And what I really enjoy with this particular podcast and also on video, and it's just really me talking behind a microphone, is I get to chat to property investors. Some of them know pretty well. Some of them are absolute strangers to me, and they get in touch and say, hey, I want to tell my story because they've listened to the show for many, many years and they've got so much value out of it. They want to give back, and I get a real kick out of that, and I'd love to have those conversations. So you can get in touch with the team editor at smartpropertyinvestment.com.au. It goes through to our team here. Get connected, get stuck in. Let's tee up a time for you to come on. But joining me in the studio today is a recurring guest. He hasn't been on since May 2021, so it's literally 2 years since, and he's been on a couple of times before that. So I've persuaded him to come back in to have a chat with me about his property portfolio, and he's sort of spoken at length around this over probably 3 or 4 shows over 5 or 6 years. So he's been investing for that some time. But I also have an ulterior motive because he's my colleague here at Momentum, and maybe structurally for this purpose, my boss, the director of real estate for Momentum Media, Jim Hall. How you going?
Oh, very well. Thank you, Phil.
Yes. How's it all going?
It's going very good, and I'm very pleased with the work you put in.
Oh, well, thank you. Happy? What's the chance of a pay rise? I'm looking to buy some more.
I don't know. I'll have to talk to someone about that.
So, as you can tell, myself and Jim, we've worked together for probably, it's over 15 years.
It is maybe close to 20 years, actually. Yeah, 2004 we first started working together.
Have I changed much in that time?
Not really.
Still the same?
Yeah.
Still asking for discounts everywhere?
Yep.
It's funny, right? Your DNA is just predisposed for operating in a particular way. But no, I say just Jim is, so myself and Jim, we work in lockstep in many ways. The two key sort of pillars, the two arms of our real estate business here at Momentum Jim is director of real estate, so he's charged with the ongoing commercial growth and connectivity and audience expansion of all of our real estate assets, and my job, managing editor of real estate and financial services here. So, I sort of cover off the content side, Jimbo covers off the commercial side, and together we continue to grow these brands inside of our real estate portfolio to contribute to the communities we work within. And obviously this one here, Smart Property Investment, is for the property investment sector, which is broad and wide, and we're going to have a chat about that. But we also have inside of this particular portfolio, this business that we run, a real estate business, which is the business of real estate for the real estate sector, which covers everything from residential retail sales to property management to commercial and the wider machinations of real estate, from government regulation and how they're shaping the way in which real estate professionals act and operate, and what that means specifically for Australian consumers. Let's just remember just how intrinsic real estate is to the health of the national economy and the prosperity of Australia. And this is something we get a real kick out of, myself and Jim, sort of shaping both sides of the real estate spectrum, the business of real estate, and how Australians invest in real estate, whether owner-occupiers or property investors. This is where we hold all our wealth, Jim, real estate, and we take the work that we do in this regards with a degree of responsibility, because, we're shaping, particularly on this show, and I get feedback, we're shaping how people act and orientate themselves around real estate and how they look about bettering their lives through real estate, whether they're working in real estate, some very good agents, but those people like myself who are looking to supercharge wealth creation and plan for a favourable future by leveraging real estate. And there's some beautiful thing, real estate in Australia, stuff like, and you see foreigners come in, Jim, and they hear about this thing called negative gearing. They go, what? What's this? So you actually get a tax deduction for losing money on real estate, which is not really what it is. It's a tax outcome, but a lot of people leverage that tax outcome to keep growing in real estate. And then they think about, once they had this light bulb moment about leverage, how you can put 20%, you're in partnership in Australia, but you have two key partners as a property investor in Australia. You're not doing it in isolation. You have the bank. So you get together with them, you form a relationship. You have 20% in the start. They have 80% of the start. And if you're investing at 80% LVR, you have a strong partner as part of your wealth creation journey. Yes, you've got to pay them interest on the money that you borrow, and in time you have to pay it back. It's a very, very strong partner. That's the power of leverage, and that's what accelerates a lot of people in real estate. You also have a great partner sometimes not so great, depending at a state and a Commonwealth or a federal level of the Australian government, who are structurally incentivised Australians to invest in real estate through incentives like capital gains tax discounting and negative gearing. Yep. So you have two strong partners. So don't hate them, love them, embrace them.
Don't be a hater.
Don't be a hater. But this is how real estate works. This is what empowers Australians to provide rental accommodation for a third of Australians that rent. I think I'll probably get the number wrong. 93% of all investment properties in Australia are owned by inverted commas mum and dad Australians, which is very different structurally to the rest of the world, who you have big institutions owning sort of build to rent type things. Yeah. So this is how it works in Australia. So embrace the notion of leverage, embrace the idea of how the government helps to incentivise property investment, because it keeps the tempo of this nation moving forward. It's a bit of a real estate loving.
Well, I think we've also seen that, real estate investing is something that is available to everyone.
Yes.
With the right knowledge. The hundreds of guests that we've had over the last 6 or 7 years, we've had people from all walks of life earning all sorts of different salaries. With the right education, it's certainly something that is achievable.
It is accessible
for any Australian.
And I sort of hinted to it, something I'm working in the background. I don't want to give too much away. And you'll see this coming out in May, and it's going to be big. But I was looking at a particular suburb in Western Australia. I'm not going to tell you where it is, but it's in Perth. And the median price, Jim, is about $305,000, right? And it's going to be a good spot to invest in. Where to put your money for capital growth. It's going to be a good spot there. $305,000. Now, you think about it. If you're a new investor and you don't have any investment property and you've been screwing away some cash, saving it, maybe working another job, you've been at it for a while, or you've been able to get a deposit together, right? 10%, you get a 9% loan. So if you're PAYG, salaried employee with some savings, right? Put this into context. Simple numbers, $300,000, right? So you do a 9% lend, you need $30,000 deposit. Then you've got stamp duty, you've got conveyancing costs, you've got, if you use a buyer's agent, all this, this sort of stuff. For around $50,000 to $60,000, you're a property investor, and that gets you started. And we all started somewhere, and one of the reasons why I wanted to bring you in today was to chat about your portfolio and give us an update on it. But property can be affordable. Property investment can be affordable for a lot of Australians. I'm not going to say the majority of Australians, but a lot of Australians. One in 8 Australians, by memory, claim some sort of tax deduction around property on their tax return, right? So it is accessible, and then you get this rhetoric all the time about how unaffordable property is and how it's impossible to enter the property market. Well, I've just given you an example. Save up those shekels with a 9% lend. You've got to pay a bit of LMI. It's probably got hence the reason why it's probably 50 to 60 grand. Mate, you cook them in gas. Tap your parents on the shoulder, ask for a family guarantee. Say, hey, look, can I have a little bit of my inheritance now rather than sitting around waiting until you're sort of 6 feet under? I want to get started, because we both know as a property investor, the sooner you start, the better you go. And if you think about the capital growth in areas, investing in areas for capital growth, a $300,000 property growing, in these high growth areas at, 5, 6, 7% per annum, you only need to wait a couple of years before you're either refinancing that loan at 80%, increasing your equity, or recycling that money and going again. And that's very much what the heartbeat of this show's been for many years, Jim. It's good.
It is good, yeah. And I think testament to that is, I think we're just about to approach 10 million downloads of the SPI show. 10 million. I looked into it about a week or so
really?
ago.
How are we going to celebrate that? I'm going to come to you. Are you going to throw a party?
I can throw a party, yeah.
Just me and you. Let's go. Mate, I'll be happy.
We'll bring some champagne in here one morning.
Mate, I reckon a park bench with a long neck.
It's probably, given your shorts
that's
get up
style.
today, that's probably about right.
That's my style. That's what I would rather than some, fancy, stuff that you normally dine, these five-star degustation stuff with matching wines. But hey, if you want to go there, 10 million. 10 million downloads.
Yeah, just coming up to 10 million, yeah.
That's like 10 million times.
Next month or so.
10 million times someone's heard me droning on in my,
yep.
Oh yeah, how's it going? Type thing. So tell me, before you get on your portfolio, Jim, tell us about real estate. Tell us about what's in store for Smart Property. What's your focus for continuing to grow this audience, this brand, because, we're at it, we're stuck into it.
Yeah, well, I guess for me it's it's my job and it's my work, but it's also something that I'm passionate about and is part of my own personal and private life as well. So, the thing is that the job that you do, you got skin in the game. Yeah, you're not just sitting around talking about it. You're doing it. That's right. Yeah.
And we're by investors for investors, right? It's our monkey.
Yeah. I don't write the content on Smart Property Investment.
No, we have a great team that does that.
We do.
Headed by Grace Ormsby.
Obviously, I have a lot of input into it, and I read it myself, and I listen to the podcast myself.
Do you actually listen to this?
I do. Yeah. Not every show.
Yeah.
There's only so much of you I can listen to in the course of a week, but I do. Yeah.
Do you have any sort of constructive feedback for me? What can I do better?
What could you do better?
Yeah. And if anyone's got any feedback, absolutely, I'm all for it. Email the team, editor at smartpropertyinvestment.com. If there's stuff that I do you don't like, okay, tell me about it. But if there's something more you would like us to do, or like me to do, or different stories you want to tell, or different guests you want, just let us know.
Absolutely.
It's a community.
Absolutely. Yeah. Well, I think we cover a lot of bases, from investors to having experts in other areas of property to real estate.
Yeah.
Talk about the commercial side of things. I think something that's been coming up for me recently, talking to other investors, is the SMSF space and the potential around buying property through your self-managed super fund. I think that would be something that we can tackle a bit more of over the coming periods. We've got some, as sort of Phil has alluded to, we've got some really exciting things coming up in the very short distance. Literally within a couple of weeks, you're going to see something really big coming out of SPI.
Yep.
That we've been working on. We've been working on it for quite some time.
Yeah.
So really excited to see that launch in a couple of weeks' time. You'll all be across that for sure.
You'll know about it when it lands.
You will. Yeah. And as you said, we have created a real sort of community across the SPI network, both across the website and obviously this show and the podcast network.
Yeah.
So just interesting. Obviously, with things at the moment, it is look, certainly for a lot of investors out there who have, probably over the last sort of 10 years, seen a lot of growth and a lot of good times. And obviously, we've been hit with those consecutive rate rises over the last year. So for anyone that's been investing in the last sort of 10 years, that's a new thing. They've only ever seen interest rates go down beforehand.
I've only seen interest rates going down.
Only seen them go down.
So I reckon most investors are going, oh, what? Really? They actually go up as well? Yeah, we've been telling you.
Yeah, that's right. Yeah.
And by the way, where interest rates are right now are normal.
They are. That's right. Do you know what? I remember years ago, and I actually fixed some rates on the way down. I fixed it because I think when I first got into property investment, rates were up, like, what did they reach?
Sevens.
I think off the back of the GFC, I think they reached up to sort of nines up there into sort of the 9 category. And I do remember sort of locking in a couple of rates around sort of 7% at one point and seeing them sort of sail down. I thought, well, you know what? Look, it is what it is. Like, you sort of
win some, you win some.
You lose some. And then obviously they sort of, went down and down and down and down and down to, I've got some fixed rate loans at the moment at 2.5%.
Lovely jubbly.
Which are nice until they come off in a couple of months' time. So
not so lovely.
Not
jubbly.
So lovely. But
what does lovely jubbly mean?
Lovely jubbly.
Where's that from? That's Del Boy.
It's from an English comedy called Fools and Horses.
So there's a lot to be learned through real estate for Fools and Horses. Anyway, that's another episode. But we like doing what we're doing. I think you can sort of take that on just through this chat, and we've got a lot of things happening. And the sort of overall focus and thrust of this show is to help people make more informed investment decisions, right? And it hasn't changed from the first episode that we did on this. And we've helped steer and navigate through good times and bad times for Australian property investors. The back end of the GFC and then all the sort of I remember when I started borrowing how easy it was, and then you got a lot of oversight through the prudential regulator, APRA, which sort of curbed lending, and they were trying to sort of make sure the banks they weren't growing their mortgage books too much on investment stuff. That's right. And everyone knows about that. They put buffers in place, which still remain. And then obviously navigating through COVID, which and eventually I'll go back and listen to and find the first time we mentioned COVID on this podcast, because I can't remember, but I know for a fact that our commentary was very measured through that whole period of time. We weren't subscribing to the doomsday merchants around property reductions, rampant property reductions and blood on the street. We were very considered in how we presented that because of the depth of coverage that this podcast has, Jim. A 250,000 people a month.
Proven to be quite a good time in property
investing. Proven to be a great time to be in property investing. For those people that could hold on, it was great. And now sort of more challenging market with the rising rate environment. But one thing that's been consistent with that the whole time is our notion around sensibility and investing within your means, but also leveraging on the team around you that you need. And by that, we talk about mortgage brokers and accountants and buyers agents. And people sort of, might get a bit sick of me talking about that, this A team. But the best investors I know, and people always ask me, what's the best lesson you've learned, or what's the most? It's always about surround yourself with the right people.
Yeah, definitely.
So pro broker. Always have been, always will be.
100%.
They now write 70-odd% of all mortgages. And within our business, we've done a lot to help try and support and steer that sector with market intelligence and commentary, and also been an advocate for it, particularly through the Royal Commission, being supportive of that community. So something we'll maintain. And one area where we have been very strong, Jim, has been supporting buyers agents.
Absolutely, yeah.
And in many ways, I like to think one of the main voices for championing the work that they do. And there's a big difference between a buyer's agent and a project marketer. Just remember that. And the notion, and I think you'll see more buyer's agents involved in real estate transactions moving forward. And this is certainly a sector that we are firmly behind and will continue to do that. And we have a lot of buyer's agents coming onto the show, and they share their insights and views around it. And if you are a buyer's agent and you tune into this and you want to come and have a yarn, make sure you get in touch with the team. It's best probably, if they want to have a chat to you, Jim, as well, just through the editor. I think it's probably the easiest call to action, and we'll get that sort of sent on to your editor
100%.
at smartproinvestment.com. You have a chat to Jim, because there's ways in which we want to keep building the voice for buyers agents, and there'll be more in that sort of moving forward as well. But I brought you in, Jim, not to rabbit on around how much I love property and how we're sort of kumbaya around property. I actually wanted you to come and give us an update on your portfolio, because I hear it's been a bit tumultuous. Did I get that right?
Yeah,
tumultuous
that's
over
right,
the past period of time. So let's get into that. We're just going to go to a break beforehand. Stay with us. Back in a moment.
This year might just be the right year to invest in property. But before you jump in, do you have a low-rate investment loan pre-approved? It might be the right time to invest, but the wrong loan could dent your prospects for achieving the maximum return. Are you armed with the best finance at the sharpest rate? Find out with Finny. Call us now on 1300 002 023. and find out what you could save. Or visit our website, finny.com.au to book an appointment.
Welcome back. It's Phil Tarrant, host of the Smart Property Investment Show, with Jim Hall, who heads up real estate here at Momentum Media, the hidden hand of smart property investment real estate business that you might not know about, but he's certainly steering these products moving forward. Now, Jim, you are a property investor. We've spoken about that. You have been on the show before. We've spoken about that. Have you enjoyed being a property investor over the last couple of years?
Probably not.
Okay.
So I don't know if the enjoyment would be the right word. Over my, the total time I've been investing, yes, but it has been a challenging period. But I think when I was on, not the last time, but the time before that, I'd had a building. It was at the very start of COVID. I think just before COVID hit, which had been riddled with termites, and I had to move tenants out and kind of just sort of left it for a while COVID played itself out in the early days. So that particular property, at the time, it was, oh God, what a nightmare that is. And then I think we called the show sort of Silver Linings, and I sort of saw silver linings in the opportunity to hopefully build a duplex on it. So, after a while, I sort of got myself together, and again, sort of with my team, through my accountant, buyer's agents, with some recommendations. I got myself a good builder, an architect, and then obviously the financing side of things. I think last time I was on, I was talking about the finance. I was just sort of getting all the approvals sorted out, which was a really, really difficult task. I'm a big advocate of mortgage brokers, and have been working in the mortgage broker space alongside real estate for 15 years or so as well. And actually went and used a mortgage broker to do my refinancing, to get the construction loan, and they just couldn't make it work at the time. I had a relationship with one of the major banks who actually could make it work. Mortgage broker did a lot of work for me, and I was very, very sort of reluctant to say, look, guys, I can't.
I'm sorry.
I'm really sorry. You've done an amazing job, and actually, funnily enough, I'm actually going through some further refinancing at the moment, and I'm back using that mortgage broker, Finny. They did a great job at the time. And
thanks for the plug, because I think I didn't want you to do that, but people know that I believe in mortgage broker. Now we actually put an investment into Finny, so by way of disclosure, and I'm all about good disclosure. It's okay. It's cool.
They did an amazing job.
So they've been all right. They did.
They put in so much work a couple of years ago, and that was a new experience for me. Yeah. Having to say, look, I can't go with the deal you're presenting. It's just too expensive.
So they did all the work beforehand.
They did all.
I've got to look after myself. I've got to go direct to the bank.
What happened is that they did all the work, and they could only place a deal with going principal and interest, which meant my loan repayments were just sky high at the time. And the bank came in and went, look, we'll do interest only for you.
Okay.
And it was kind of an 11th hour thing.
So it's funny how the bank was happy to do it, but the broker couldn't get the bank to do that.
Yeah.
Okay.
It's just, obviously
one of those things.
Another thing to discuss at another point in time, perhaps. But anyway, so I'd sort of gone down a very lengthy process, and I mean lengthy. It probably took the best part of about 9 months from start to finish to get the refinances all sorted.
Yeah.
I got them in place. I'd already been discussing things with the builder. Again, it was a time, so this would have been early sort of last year when construction costs were going up exponentially, as I'm sure a lot of our listeners are well aware. So it took its time, but we got the designs in. The architect spent a long time getting the plans. It was an interesting spot. It was out in Campbellton, in an area called St Andrews, big block of land, but it was on a bit of a slope. Anyway, to cut a long story short, after probably about a year of refinancing and working with builders and architects, the council came back and said, look, we won't approve it. They would not approve the duplex.
Why is that?
Council regulations.
Did they change the regulations, or was
no? I can't remember off the top of my head the exact sort of reasons. I spoke to a few different people about it. Like the architect went back and forth, saying, look, it doesn't make sense to where I'm standing from. Spoke to a few different people in the industry that I'm aware of, some other buyers agents that deal with construction quite a lot, people I trust and know. And it was kind of came to that point where I just had to sort of let it go, basically. Like it wouldn't make sort of financial sense to just do a rebuild. It had to be a duplex.
From a cash point of view.
From a cash
yield,
point, from a yield point of view. So in the end, I was kind of, left with basically a block of land with no...
so a house on it, which is termite ridden.
A house on it worth
someone couldn't
nothing.
live in.
Yeah, absolutely. So
the liability to knock the thing down,
correct,
probably.
yeah.
Okay.
Yeah.
Wow. So I'll ask you what you did with it, but the point that you're making around, and this is buyer beware. You didn't buy that property originally for the purpose of knocking it down and putting the duplex on. The reason why you look for solutions because the house was uninhabitable and you had to do something right. But a lot of property investors identify blocks for the purpose of some sort of upside potential. It might be a duplex, it might be a granny flat, it might be a knock it down, put some townhouse on, whatever that sort of stuff. And you can look through the information on a particular council and they'll tell you what's stipulated to allow you to do development-orientated stuff. And maybe the headline for this when developments go sour or don't even get off the ground, right, for this podcast. But you might think that you can do something with an asset and you may even try and do a pre-DA meeting with someone from the council where they come out and you go, look, we're thinking about doing this and that and the other and whatnot. And they go, yeah, that would all be within the regulations. So then you go, okay, I'll start the development application process, which is, if you're thinking about this, it's hard work, right? It's hard work and it's never easy. But you spend all the money to get architectural plans put together, you get a town planner in, you put it all together, try and get a DA, and they go, no, we're not approving it. You go, okay, what do we need to change in order to prove it? Sometimes they go, change this. And it might be because someone's complained about something, you're blocking someone's sunlight, it might not suit the appeal of the area, whatever, right? So often if you can present in your development application a good case for a development and be accommodating to work with the council, not very often they just go, you approved. Like they always come back going, this objection, change this and we'll consent to it, right? But the flip side of that is yours where you do all that work and they just go, no, not approving it. So you went back and tried
the architect obviously works in the local area, knows the council.
And he's going, I don't understand it.
He went back and forth. Yeah. He presented some other cases in similar suburbs, which were very close by.
In the same council?
In the same council.
This would be
Campbelltown Council. Yeah. So there was nothing similar in St Andrews, which is where it was. And I think from memory, it was all around basically the council wouldn't allow it because it would essentially, the only way we could do it was by having two houses, but one at the front and one at the back, essentially. Okay. So there was some...
So they didn't want a detached. They wanted a detached dwelling. They didn't want side by side because they're going. There's nothing else like that in St Andrews.
Basically, it was along those lines.
And this is the issue, right? Like as soon as one person gets one of them done, everyone goes, "Well, there you go." So it's hard to be first. Hard to be first, right?
Yeah.
But nothing is ever guaranteed. A good mate of mine, and you'll know him, bought a block in. A house in Lilyfield, right? Which is, and you probably work out who I'm referring to just by that, but Leichhardt Council on the basis, and he did all that. He did pre-DA meetings, got a really good architect involved, blah, blah, blah. On a street that's full of duplexes and townhouses, right? So he said, it's just exactly like the place across the road, down the road, next door, whatever. So obviously all these properties have been approved over many, many years by Leichhardt Council. Exactly. He's not doing anything different. He's just copying pretty much every other house on the street and lodged it all, and it got rejected. He's like, well, why are you rejecting this? He's going, look, we have all these examples. It's the same as what you've approved everywhere else. And again, yeah, we're going to change the rules around it. So we're just going to apply it to yours. But they're like, well, you haven't changed the rules yet. This is completely compliant based on, the rules around development and consistent with everything else that's on the street. Yeah, but we're going to change it. So too bad. So he wanted to put a duplex on there, and they contested it back and forth, and they've gone, nah, get stuffed. Yeah, really. He can't do anything about it. Like, so he's now got to build they're happy for him to develop a big 5-bedroom house on it, but they didn't want the density on it, and everyone was sitting there scratching their heads, going, but it's exactly the same as every other street here and there. Yeah. No joy. Yeah. And it's completely changed the financial capability of that particular restaurant. It'll be okay, but it won't be as okay as what he would have been if he was able to develop that duplex. So, You never know. Like it is. You are right. If you're going to go developing, you're rolling the dice at every step of the way.
You're right. Buyer beware.
Buyer beware. You find a block you think you develop, you go, no, not going to do it.
Yeah.
You're rolling the dice. You buy a block you think you develop, you get your plans approved. Happy days, you can start building. Building prices go up by 30%. Rolling the dice, right? And this is the reason why a lot of builders are going to the wall at the moment, because they've promised to build fixed price contracts and stuff where they functionally and financially just can't make it work. They lose it. If they start building that, they will lose money. Yeah. That's the reason why they're going bust. Yeah. Then you've got the other issue of rolling the dice is that you want to get finance on a development, right? Okay, good luck. Often it's pretty hard to do it through the mainstream banks. So you're operating around the fringes of, specialist lending and development finance. So you're not getting even 6%. You're getting much more than that because of the inherent risk around development. Yeah. And then they're only ever going to give you money if you pre-sell them, right? So you're rolling the dice the whole way through it. And a lot of people only hear the good stories around developing and they go, oh, these builders are making all this money. Look at these developers. They're making heaps. Probably more people get it wrong than get it right. Yeah. And a lot of people blow their dough. So it sounds to me as though you've just gone, I've got to take a haircut on this. And, and get out of it.
That's right. Well, similar to your friend in Lilyfield, doing a one house build just wouldn't make sense. I would have been.
Be okay if you got to live in it. It's owner occupier.
Absolutely, but I would have been overcapitalised. I would have had to have spent more than what the property would have been worth, and in terms of the rent that I would have got, it wouldn't have been close to sort of paying sort of mortgages.
Yeah. So let's take a look at the psychology of taking a haircut, right? And everyone's got to take one at some point in time. We'll just go to a break. Everyone, just stay with us. Back in a moment. Welcome back, Smart Property Investment. Phil Tarrant here, chatting with Jim Hall. Was it a bitter pill to swallow having to take their haircut, or was it like a headache that was nice to get out of your orbit? Because I reckon you were holding that property for at least a year with no rent coming off it. But
try the best part of 3 years.
So you had that for 3 years just as an empty thing. You're paying rent. You're paying.
Yeah.
How much was it? How much was the mortgage a month?
Oh, the mortgage.
What do you reckon you dust? What did you dust?
The mortgage was.
Don't talk about it. Should we not talk about it?
I don't mind talking about it. No, it's okay. Yeah, the mortgage was about $1,500 a month.
Okay. All right.
Yeah.
Yeah. Okay. Okay. So you've done over $100,000 in mortgage repayments over 3 years.
Yeah.
Yeah. Did it go up in value for you?
Yeah, it did. Yeah, I mean, it did. Yeah, it did go up in value.
So let's talk numbers then. So inherently, were you square after all? You're still ahead of the game.
Well, I
probably refinanced it at some point, did you?
Exactly that. Yeah. So I'm happy to talk numbers. I bought it in 2012 for $242,000.
Okay.
And I spent, I think, about $55,000 doing some renovations. So I turned it into a 5-bedroom house. There's a few complications with the property. There was a pool in the back that we...
Oh, I remember this.
Yeah, which we wanted to get rid of. And again, the council, at the time, we were just going to sort of fill it in, and council were like, you can't do that. It has to actually be properly removed.
Was the pool legal? Was it a legal pool?
It was a legal pool, yeah.
It was just stuffed, was it?
Yeah, No, it was just an empty pool basically that needed a bit of work. And when we bought it, we were like, look, we'll just fill it in and cover it up. And at the time we bought it, that was okay. But I think what had happened, there'd been council regulations had changed, and you could no longer just do that. You had to sort of take it out properly.
So that's the difference between you could do it when you bought it versus...
Correct. Yeah. So in the end, we had to get a diggers, and it cost a fair bit of money to take the pool. It was old concrete pool.
How much did it cost you to get rid of the pool?
Oh, I think probably getting rid of the pool and filling it in was probably around about $25,000. Yeah, pretty...
Really? Just to get a level bit of dirt?
Pretty costly at the time it was, yeah. Everything that needed to be done to get it done.
What did they fill it up with? Do they take the concrete away or just put it in a hole?
No, so this is the thing. So you can't do that. So you literally have to take everything away. Yeah. So, and because it was quite difficult access through a slope.
So they had to get a digger with a hammer on it.
Yeah, absolutely. Yeah. So it was a bit of a process and relatively costly for.
So you reckon you did like, is that included in that? So you did $50,000 reno and then another $25,000 to remove the pool?
No, probably
That's
probably all
inclusive.
up it was about all inclusive. It was about probably about 60,000, I think.
And where'd you get the coin to be able to do that work? Was it just some refinance money? or something?
Refinancing,
Okay,
so
you had the money set aside for it strategically.
Correct.
Okay.
Yeah. I had money in an offset account at the time.
So
which I
you're
sort of
300
used.
in on all of that, right? Plus probably buyer's agent's fee, stamp duty.
Yeah, that's right.
So to do all that, what you're in sort of 340, 330?
Yeah, I'd
Let's
say
say 340.
that.
Okay.
Yeah, and then it topped out at a valuation of about 850 at one point.
Was that sort of a couple of years ago? No.
That was probably 3 years. Yeah, probably. Yeah, desktop valuation.
Yeah.
Obviously, you go in and inspect the house and realise it's termite damage. But desktop valuation came in about 850.
Okay.
Which was pretty good.
Well, you've done well then. It's like 2 and a bit times.
Correct.
What your original money.
And as you said, I'd used that property over the years to refinance and pull out equity so that I could add some more properties to my portfolio. But anyway, cutting a long story short, once I realised I couldn't do anything with it, so I looked at my options, spoke to the managing agent, real estate that I'd had a relationship with sort of 10 years, has been very good, and looked at sort of what we could get really for land value. And we put it on the market and we got some, that was quite an interesting story of that, but we got someone who bought it, 570,000. I think the loan on I had it at the time was about 520, I think it was.
Okay.
So yeah, I kind of cleared the loan. I'm going to have to pay a bit of capital gains tax next year.
So that's the problem. You got to pay capital gains on the purchase price of
Correct.
242.
Yeah, that's right. So
Well, you get your 50% discount, but
get a bit of discount on that, but never that. Yeah, so obviously I've got to work out. how I'm
that's
gonna
got to
weigh
hurt
that
paying
next
tax
year.
on something that you've made no money. Like
Yeah, essentially, that's right. Yeah,
This is it.
But again, so there's a bit of a but again, you settle down and you accept what is.
yeah.
And at the end of the day, that property's enabled me to purchase more properties. It's been good in that respect.
So that refinance that you've done, you've deployed that money elsewhere and you've got good income producing assets. So you've got
Correct.
the benefits of the capital growth on the way through.
Yeah, that's right.
And you have no debt left on it. So essentially that money you've used is that there's, in inverted commas, your profit, right?
Yeah, that's right. I've learned
Minus the debt on the way through.
Yeah, I've learned a hell of a lot with that property on many different things, from financing to construction to councils to all sorts of things.
Did you learn enough not to do it again, or you'll give another crack?
I would, when the timing's right,
Yeah,
I would do it again. Again, I've got to take the positives out of it, and I really do sort of see that. Look, we all know how things have changed quite dramatically over the last sort of 6 to 9 months. Cost of living's gone up an awful lot for pretty much everyone, no matter what income bracket you're in. So I can't help but think it's a blessing in disguise. In all honesty,
Some of the best gifts come badly wrapped.
they do indeed. Yeah, quite. But yeah, I do think
people know who I'm referring to.
I do think it's a blessing in disguise. In all honesty, we've seen property prices coming down in that area. I know they've sort of come down, as you said earlier. Sort of the construction costs have risen an awful lot. Things have got tight. Budgets have got tight. Interest rates have gone up by a lot. So yeah, I looking at it of what could have been, I could have found myself in quite a mess. Almost overextended, or certainly feeling the pinch.
So you've probably, it might not have been the most favourable outcome financially, but from a Jim Hall balance sheet and orientation of happiness around your portfolio, it's probably reduced a lot of stress.
Yeah, I think it has, to be honest.
Yeah.
And
and there's something about simplification. I talk about it all the time, and this is perpetually what I think about. Is like, how do I make stuff simpler?
Yeah.
How do I make stuff simpler? Simpler is usually better.
Yeah.
And it's easy to complicate yourself as a property investor.
Yeah.
And it's great when it's all singing and dancing, but sometimes your portfolio is an absolute nuisance.
I know I could have seen a parallel life over the next 6 to 12 months of real stress, real headache, troubles with builders, troubles with the price, troubles getting refinanced once it's done. That's my alternative reality. So I've got to take the positives out of it. Great learning experience.
So you had some help on the way. So You mentioned a buyer's agent, so you're working with them on this, were you?
Yeah, well, yeah, just in terms of advice and
Who's
support. The guys at Right Property Group.
Oh, okay.
Yeah, Stephen Victor.
Oh, yeah, cool.
Victor's, give me a lot of good information. And even, once I sort of told him, I'm actually catching up with them later today as it happens, but which I'll obviously sort of discuss with them. But yeah, again, just gave me some good advice when I realised that I had to sell, that I couldn't make it work again.
And a buyer's agent, you see, going back to the role of the buyer's agent and why I think they're a huge enabler for people, a lot of buyer's agents' first connectivity with a potential client or customer is to resolve a problem. When they go, I want to invest in property, my portfolio isn't good, I've bought the wrong stuff, I've got the wrong advice, can you help? Is where it happens a lot, right? And often a big part of their job is deconstructing poorly constructed portfolios. And sometimes there'll be stuff like this in there where you just go, mate, just working with someone just going, you're going to be better off. It's going to hurt, but you're better off getting out of that and recalibrating and going again with the right stuff. So this is about portfolio construction. If that's all you had as a property investment, it's a poison chalice. You wouldn't touch property again, right? But because it was part of a portfolio construction, which no doubt was strategic, and you had that there as a purpose, and it served a purpose in terms of leveraging you into new properties, you've still got the benefits out of it. But you've got to be pragmatic and realistic when it comes to your portfolio. Get rid of the stuff that's not performing. Like don't hold on to it. And if it's egotistical or it's, you feel embarrassed about it, it just doesn't matter. Just get it out, clean it up, reorientate, go again, take control. So what's next then for you, Jimbo?
Yeah, well, I think that's a good leadway into where I am at the moment. So yeah, I think what it has done, it has made me realise that, the portfolio I built, and again, it's been a good portfolio that served me really well over the last 10 years.
How many properties in the portfolio?
Once I've got that, now I haven't got that. I've got 8.
Okay, so it's a big portfolio.
Yeah, well, yeah, it's not, and there's some good equity in it. So I'm going through the process at the moment, talking to my mortgage broker, just seeing what's possible. Obviously things have changed. Interest rates have gone up a lot. Lending criteria has changed. So I'm just seeing what I am actually able to do is my first port of call. Yeah. I've got a couple of loans that aren't fixed, so and some good equity in those 2 properties that they're attached to. So I'm looking at what I can do with that. So
you're not saying that's it for me. I'm tapping out of doing more. You're going to keep acquiring property or shuffling the deck?
Yeah, absolutely. Yeah, that's the plan, 100%. So this is probably stage 3 maybe for me, or stage 2.5, 3. Yeah, looking at what I've got, for I guess the next phase of my life and the journey in sort of property investment, because I do, Well,
you still got a lot of good years of earning money.
Exactly,
ahead of you, right?
that's
so
right.
You've got to make hay.
And to be honest, if I could get the finance, and again, I'm not too sure. I'm waiting to hear back at the moment. It's all going through at the moment. Seeing what I can do, I'm chomping at the bit to buy property again, because now is I believe that now is a really good time. For people that can get finance, that are lucky enough to be able to get finance sorted. I think there's some outstanding buying opportunities out there at the moment. So I'm hoping that I can tap into that one way or another. And then I'm also looking at, just like you said, maybe it's time to get rid of a couple of properties, replace with them with some other style properties.
Yeah, and I'm going through that right now on the Smart Property Investment portfolio.
Yeah.
Lots to come on that. Yeah, just shuffling the decks a bit, and it's good to trade sometimes. In property, you don't just buy and hold is great, but there's certain points where it makes sense to start trading, transacting.
Yeah, and that's it. I think, when I first started off, it was hold for the long term, everyone sort of.
But you've held these properties for well over a decade.
That's right, about 10 years, most of them. Yeah,
so it makes sense to actually take a review, because, life changes, circumstances changes, your income changes, and you potentially start looking at different assets or doing different things, and it's good that you're not being burned by this sort of foray into property development, and you've learned some tough lessons that no doubt will serve you better moving forward.
It's quite not, when you sort of go through, I guess a bit of a nightmare with something like that, and then you almost sort of wipe the slate clean, and you look at things and you realise, actually, I'm still in a really good position. I've got some really good equity in the portfolio that I've built, again, through good advice using a buyer's agent, certainly not for my own choosing. But yeah, so it's nice to know that, what I have done over those years, even though I haven't been particularly active in the last few years, I've got a portfolio that survived that. It survived a relationship breakup. I separated from my partner sort of 6 years ago now, and Yeah, and managed to sort of keep the majority of the portfolio. So it's been an interesting journey.
Yeah.
But nice to know that it's still, it's still something that's good, that I've got some good equity. If I were to cash it all in tomorrow, it would not be enough to retire on.
No,
but,
you'd be all right. And this goes to the back to, and I'll conclude with this sort of remark, this notion of good portfolio creation should be able to withstand seismic significant challenges to personal circumstances, economic headwinds, economic tailwinds, price challenges and stuff. So this comes back. You want to, and it's about resilience. It's about building a resilient portfolio. A lot of people think they need to build a large portfolio. What you need to do is build a resilient portfolio, which gives you choice through the purpose of through the trials and tribulations of property investing. And resilient portfolios often are pretty well structured from a yield point of view or a cash flow point of view, that you're not hemorrhaging money on them. That often leads to a resilient portfolio. But a resilient portfolio also means that when things do happen, that you've got assets in there that can potentially be liquidated, that can potentially, they've grown, so therefore you can extract equity out of. They just give you choice and options. And to the point around, every now and then you're not going to win in property. Yeah, tuning into this podcast, hopefully you win more than you lose through sensible discussions around property investment. It's not advice by any means, but sensible discussion around the property investment. It all comes back to mindset, So you're going to cop it every now and then, but it's how you choose to orientate and calibrate what goes on in between your ears will help you embark on changing, evolving, re-engineering your portfolio. So it's easy just to sit there and go, that's it, I'm done. I'm going to under the covers and cry myself to sleep because it's all wrong. You got to take the good with the bad, and get your mindset right, get your attention right, get your team right, get your finances right. You can often not only weather the storm, but once the storm passes, and it comes back to this notion of this too will pass if you do the right stuff, you can get going again.
Yeah.
So it sounds like you're there.
Yeah, we're sitting here now, actually, Phil. It makes me sort of think about why we launched Smart Property Investment in the first place, going back to 2010, I think it was, off the top of my head. And, you probably remember there was some other sources of information for property investors.
There were seminars, there was a couple of
and all you would hear about is how I made, millions and millions of dollars, often through mining towns and other investments, which we look at now and, wouldn't touch from a barge pole, to get, the real track around, what is it actually genuinely really like for a property investor and how can you make smart decisions. Yeah. Not just to, on the gravy train years when things are always going up. Yeah. So, I think the 10 million downloads are probably testament that we've been
it's crazy,
trying to
isn't
get
it?
that
And thanks for closing the loop. You've just really brought that back nicely. This is the reason why we do what we do. And I'm a journalist by trade, and I used to write a lot. I don't write anymore. My journalism is having a yarn like this, right? And I think 10 million downloads is testament to the fact that what we're doing is resonating with Australian investors. And I still get huge satisfaction out of people coming up to me on the street, or like randomly, they'll sort of, happen a couple of months ago. I was just in a bottle shop getting a bottle of wine and someone went, oh, yeah, that looks like a good buy, Phil. And I was like, what's going on? Like just to listen to the podcast, like they're everywhere. They should recognize your voice, right? And by and large, everyone was like hugely appreciative of the work that we do, and we'll continue to do it, and working in lockstep with you, hand in glove, building this part of the business and being relevant and having greater connectivity and continuity and all those great stuff for the communities we operate within real estate. We'll keep doing it, mate.
Yeah. And speaking as your boss,
yes, sir.
I must say it's good that your journalism is now via the form and the medium of voice rather than written, because I do recall you very, very, very infrequently hitting deadlines.
This is true. It's easier for me to do it's so much easier for me. Number one, it's easier for me to do this. Number two, I much rather talk than
never
write.
Misses an SPI show.
Yeah, never misses SPI. I much talk and write. I can still write okay, but I much rather talk and write. But it's a very different way of communicating, right? Like you can't formulate, and move so seamlessly between topics through the written word. It's
and how people digest information has changed an awful lot.
So keep tuning in. One favour. though, for me. I don't ask for a lot. I don't think, Jim. I don't ask for a lot. But please keep those reviews coming. You haven't even done a review.
I have.
Oh,
it's
you
not
have
true.
done?
I
Okay,
have.
all right.
About 10 years ago.
Okay, all right. Maybe update it.
I'll do another one.
Do another one and tell your friends. Keep those reviews coming wherever you tune in. There's most people on the Apple podcast player. There's lots there, and I look at them. I look at them regularly, and I take the feedback that comes in. Largely, they're 5 stars. And when they're not 5 stars, it's not normally because of me particularly.
It's saying, so if we don't get 5 stars, it will be because of me?
Probably.
Most likely.
but we do take that constructive. Everyone is complimentary. They just always say, oh, maybe you could do this differently. And that's cool. And we rely on it. So please keep them coming. And it helps us also for more people finding the show. The more people that comment on new stuff or review it, the more people find it. And as we embark on this 10 million downloads, I need to know exactly when that is, because I want a balloon to fall from the ceiling somewhere with some confetti or something or other going off. But we will mark that occasion. That's Jim Hall. He's Director of Real Estate Momentum Media. Thanks for coming to share your story, mate.
No problem, anytime.
Nice one. Remember to check out smartpropertyinvestment.com.au, social media, Smart Property HQ, and watch this space. There's something big coming. We'll see you again soon. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Are you looking for a new challenge that combines your existing skills with the exciting world of mortgage broking? Well, listen up, because we've got the perfect opportunity for you. Introducing the Advisors New Broker Academy 2023, a free event designed for professionals just like you who want to learn how to become a trusted broker for their clients. Coming to Brisbane, Melbourne and Sydney in June, you'll learn from industry specialists and gain crucial industry insights and intelligence to become a go-to broker. You'll also have the opportunity to network with brokers at all levels and gain a competitive edge in the marketplace. Register now for free at newbrokeracademy.com.au and join the top brokers of tomorrow.